It is April 5th. I'm taking a look at the uranium stocks here. And before you rush in to buy these things right here, I want to show you my trade plan so that you can improve your odds of success. So I'm taking a look first at Camco CCJ, and we first got long this thing here on this breakout. And then we rode it up somewhere around here and started selling some in here and maybe a little bit in here. And then ended up buying back a little bit, but not all, in here. And it was not enough because I did not expect this kind of huge move here. You can see it here on the daily. I did not see that coming. So I didn't get as much size on as I wanted to in here. That was the nice one right there, bounce off the 200. That was your spot to know that you could set a little buy trap in there with a stop down here under 40. That would have been great. I did not get there. I only got a little bit of shares here from when I sold, like around here and in here. I sold my shares in two chunks there. So now the question is, what do we do right here? I mean, do you just come in and start to buy this thing up here underneath 50 as a starting position? Or if you're like me and only got on a little bit down here and don't have enough size on, I don't know. I got to show you this. I see two possibilities. One is that this thing forms a nice little move right there, and then we get a breakout on the new highs above 50, okay? And then, you know, you can expect a little pullback to 50, which is basically right where we are now at 49, right? Before it kind of resumes the uptrend. So I think that this is likely, I mean possible, but I wouldn't really start to go in and buy right here if you get this kind of a push out above 50, because like I said, you're likely to get some kind of pull back, a test of this 50, and then you could set a much better buy trap right in here, you know, and then get your stop like right underneath 50. Okay, that's one possibility. And that would have you as a low risk entry buying right here, basically where the price is anyway, but you'd have a lot more information and thus less risk if you saw this breakout of 50 and you could see, you know, if there's any kind of good volume breakout, you know, then you would have lower risk at a buy if we did eventually get the pullback into this 49.50 range and you see a little bit of a bounce, boom, that's your signal to buy with lower risk, because you would see the additional information of this acceptance of higher price up into the 50s before you would set your buy trap right in there, okay? Now, let's clear this off and I'll show you the other possibility I see. Okay, right here, boom. I mean, what if we do this, you know, and we do kind of like a little fake out and then boom, right? Right back into this range down here, which is what I'm hoping, because I do not have enough size on in this CCJ, the Camco. So then guess what? You know, you set your buy traps down here around 40, right? And you get your little stops, your little stop out down here, right? And I think that's a much better trade than just buying in right up here, right? So you can either get a lower price or a lower risk buy at the same price if you get that. Going back to this weekly, this is a good stock. You want to be long. You see this uptrend, okay, right there. Now this moving average, that's the 30-week moving average. Okay, so this is the old Weinstein, right? Stan Weinstein's 30-week moving average, so you can get his book. That's where I built this chart from, is off of his little system. Uses the same kind of thing as Bill O'Neill and Mark Minervini and David Ryan. So this is a good stock. You want to be long these. Look at this. This is where I'm setting my stop, right underneath this last low, right here, okay? Before that, I had a stop set right underneath here on CCJ, okay? And the stock never hit my stop, but it came close. I think I sold some up here on this, and then I got real kind of cute with this, and I set a stop right underneath this low, and then it was triggered, you know, on this little decline right here. So I sold out of my position, and I bought only a little bit of it back, like a quarter of it, I think, up in here, somewhere around here. I bought it back right when it came into like here, right? Yeah, that's what happened. Maybe not right there. Maybe I got it in here. after it hit my little stop right there, okay? On this move, it punctured through. So I want to get bigger in this stock, CCJ, but I think you're going to get an opportunity to buy this thing as it kind of churns around in this range, right? Maybe you get a pullback down to here, and then you can buy some, okay? And then it gets another bounce, and then, I don't know, if you want to sell some up here, you know, I guess you could. I'd rather try and just start accumulating this thing, because you never know when it's gonna, I mean, maybe you get a pullback and then you're waiting to set your little trap down here, but then the thing just kind of, instead of going down there, it just kind of ramshackles higher. You know, you could do that, and then look what you've got here. If you've got this, you're seeing it's got this now, look, that would be like this kind of a move, and then this, and then that. Well, you know what that is, right? I mean, come on, that's your little Minervini VCP, Bill O'Neill cup and handle, Sam Weinstein's the base, I mean, everything. You got this right here, all right? You've got this nice long base in CCJ, the first breakout, and another tiny base, and maybe this is the start of a breakout, right? And again, all of that is above the 30-week moving average. So this uranium looks good, but I'd be careful about buying it right here. Let's take a look at some more in the uranium. Okay, here's Denison Mines, DNN. You see the same type of thing. Long base, okay? First breakout, another little base right here. And what we look like could be the start of either a new breakout or, more likely, right, some kind of just a trading range as it kind of churns around in here until it eventually breaks out at $2. And now let's take a look at the daily here to just highlight this. I mean, you got big volume here. These big green volume bars, that's what you like to see. Okay, look, got a problem right there. That's worrisome, right? Okay, big red volume, and another one on this last day here, which was yesterday's move, right? Right down there. Okay, so that's further evidence that maybe what we're doing is taking a little bit of a breather here as this thing finds a new range to trade in. So let's look back at the 30-week. Yeah, we got above the 30-week moving average. So guess where you're going to want to set your stop, right? Kind of below this last low, okay? We got a new range now to set our stops in. So you're either going to want to set it either right here, or, I mean, if you're adventurous, maybe beneath this 200-day moving average, okay? Right? So that way, if the stock comes down and then, you know, you don't get stopped out, but if it comes all the way through, you know, you don't take one of these. Because look at this trend line. This trend line goes all the way back to 125 before you could get a decent bounce, you know? And it wouldn't be anything bad. I think that's the top of the, like this base kind of a move up in here, the super long one, right? I could see that happening where you just get kind of a move down and some kind of major sell-off and then a ramshackle back higher. I've seen that kind of stuff before, you know? So let's take a look at some more uranium stocks. And here's NextGen Energy NXE, same thing. All right, holding above the 30. You had this little base on top, and now we got this move where we have to make our decision. Do we buy right in here, or do we kind of just wait it out and see if this thing maybe wants to form some kind of a range, you know, with that upper and lower kind of limits here, all right? Just like it did kind of here, right? And then here, right? So it gave you nice little opportunities in here to try and build up your position before it broke out to new. All right, tested that level, gave you a low risk buy, and started to find its way into a new higher range, right? So we're getting probably, I hope, the same thing here. Now the reason you could be selling this right up here, right, and trying to, but I don't know if I want to risk that. You could be playing these little bounces and hoping you get some opportunity down here to buy it back and then, you know, try and sell it here and just play this range. But listen, Personally, I'm not trying to do that kind of stuff. I'm trying to just build a position like down in here you know, and not try and do all this cutesy little selling up in here, because I want to have a bigger position in case this thing really just starts to go. I mean, you know, this is at $4. If this thing just starts to go, you know, way off the charts here, I want to be on board. That can happen. I got a note somewhere. Rick Rule, look, let me find it. Yeah, Rick Rule said this, right? Rick Rule said, there it is, look. Uranium bull markets, when they come, are the most dramatic natural resources. Look, I've experienced it. So look, most dramatic natural resource bull markets, okay? I want to be on board. This is my little trade plan for Denison of what I think could happen, right? And I just want to keep this in mind, this longer term picture, that in case this stuff happens, right? This was at 130 before it broke out. So as soon as it actually did break out, yeah, look, we got on board. I was waiting for this for a long time, and I got in, right here, because I was waiting for that breakout. As you can see, I mean, I was waiting for a long time. Finally, it broke out, and I want to be on board. If this thing just kind of goes, look, it's at, there it was at 179. If this thing just kind of goes, you know, boom, I want to be in this, okay? If this can go to $4, $5, $6, I don't know. So I want to be on board of that, right? This next gen, it looks good too. I really like that this thing made a higher high. Okay, now check this out. Keep this in mind. This next gen made a higher high and is holding above this $8 right now. But check this out. It's stronger than the rest. Let's look at the broad ETF and see what that one did. Right after we check out this volume here, always check your volume for confirmation. Yeah, you got big green volumes right in here. Okay, that is what you want to see. That is institutional accumulation. You see those? And then you got these nice little cluster right there. It started back here. Look at this. This was when the institutional accumulation started. Right there, okay? Right when you had this nice base with a little bit of a breakout right there. That's your signal. On this big volume, that's institutional buying, right? They drove it up here. They're patient. They're not going to just keep on buying and buying above 650. So they wait for it to come back, okay? And then they slowly start accumulating. Look at that big volume, big volume. All the big volumes are green accumulations, right? And look what happens here. One red volume and kind of stalls out, right? And that's what's forming this bottom of our current trading range. Now, did this thing break out? I don't know. Got to wait and see. I don't think so, because we're starting to get these big volume clusters red in here, right? So maybe we get false breakout. This thing comes back into 7, chops around, right? But look, I do like that it made this higher high right here, okay? That's above this previous high. Now let's go check out the URNM to see how that one's doing. You can see it. It's got, look at this high. Remember that NXE made a higher high? Well, check this one out, right? Lower high, okay? I do like this little angle, though, that little down angle it's doing right there. That's nice, but still, you don't ever want to see a lower high. So that's why I think we've got probably a new establishment of some kind of a range right here. And as long as this thing stays kind of above this 30-week moving average, see, it pierced below here but didn't close below the previous low down here, right? This was a scary one. I stayed in even though it went, this is a weekly. It intra-week pierced below this previous low. You see what I'm talking about here, right? It was a little bit scary, but I held on because I had a long-term plan, and I was waiting for a close below this previous low right here before I would stop out or begin to sell. And then lo and behold, it, you know, popped back up because it looks like there's institutional demand for it. Let's check out the volume. I don't know, this is an ETF, so it might be a little different. And you can see, look, yeah, big volume here. We got this mixing in red, big volume reds here. Look, we started a little change in character right here, okay, with, look, lower green ones, big red, and then some lower green ones, right? So more evidence that I think we're going to get some kind of a trading range, all right? And you're going to want to be smart. because you've got this entire, look, up to 60, right underneath 60, down to 46, right? So call this, what, 58 to 46 range? I mean, that's pretty big. So this thing could get volatile until it shakes out a lot of the weak hands, you know, just kind of trades sideways here on a daily, shakes out a lot of the weak hands, gives false breakouts, and then swings back down, right? And then everyone in here is getting emotional, and then eventually, you know, what's going to happen on the weekly is you'll get a little bit of a, you know, tightness, and then boom, you know, and that's where you want to be in, right there. But, you know, don't forget your stop below this previous low, all right? Right there. That's your low, that's your stop. That's my trade plan. Thanks for watching.